Borrowing against life insurance can be a viable option for acquiring necessary funds. But it's essential to understand the process and potential implications. To begin, it's crucial to comprehend the type of policy you have. As permanent life insurance policies, such as standard universal life, variable life, and whole life insurance, accumulate cash value over time that can be borrowed against. Whereas term life insurance policies do not accumulate cash value and cannot be borrowed against. To proceed, determining the cash value of your policy is necessary, which can be done by contacting your service provider. The cash value represents the amount you can borrow against your insurance policy. However, borrowing may reduce the death benefits and have potential tax implications. It's also important to explore the different options offered by your insurance provider, such as policy loans or withdrawals, and weigh these options to determine the most favorable one in terms of interest rates and repayment requirements. Once you've assessed your loan prospects, you can begin the application process by reaching out to your life insurance company, which will provide the necessary documentation and guide you through the process. You'll need to submit policy details, personal information, and other required documents to complete the application. After that, it's vital to thoroughly review the loan terms and conditions, focusing on key information such as interest rates, repayment options, associated fees, and penalties for defaulting, as failure to repay the loan may harm your policy and lead to termination. Upon finalizing the application process, the loan will be released to you, either by check or wire transfer, depending on the insurance company's policy. It's then crucial to repay the loan within the stipulated time to avoid penalties and preserve the death benefits of your life insurance policy. Repaying the loan on time increases the stability of your policy. Borrowing against life insurance can be a beneficial way to obtain necessary funds, but it's essential to understand the disadvantages, particularly when defaulting on loan repayment. By following these steps and being mindful of the potential implications, you can make an informed decision about borrowing against your life insurance policy.